are generated back to the fund and to you, the investor. You may ask, why would you want to invest in a unit trust or a pooled facility rather than on your own? And there are several advantages. A few of them really I've highlighted here. It's that it gives you access to a wide range of assets that you probably on your own would not have been able to acquire. And even if you are in a position to acquire them on your own, the costs associated with acquiring those assets, because there are fees and there are costs that you have to pay to acquire financial assets. So the cost associated with acquiring them on your own would be significantly higher than investing through a unit trust scheme. We're talking about taxes, and I'm sure you'll be happy to hear about this one. The unit trust funds are tax exempted, and it's from two different perspectives. So let me explain. The fund itself, which is the investment vehicle, is tax exempted. That means any interest earned from those assets, any capital gains, any dividends paid are paid gross to the fund. So remember, previously I said the returns go right back to you, the investor. So already you're ahead of the game there. The other perspective is that there are some investment gains that are tax-free. So remember, on the fund side, anything earned by the fund from those assets are tax-free, period. But there are some funds that also offer investment gains to you, the investor, and I'll explain which funds those are later on. It's usually a very affordable investment. Usually the minimum is very small, marginal amount. Some companies give number of units. At VM Wealth, we give a dollar value. So the minimum in J dollar is 10,000, and the minimum in US is 500 for any of the funds. It's a liquid investment. You can be in and out within a day. So we all know real estate, if you were to invest in real estate outright, it's not very liquid. Stocks and bonds are a little more liquid, but there's still usually a settling period associated with liquidating these investments. With the unit trust, you could walk into VM Wealth today, request your funds, and you walk out with a check. It's also very transparent because the units and the details on the units, the prices, are published twice weekly and are available on the website. So you can actually track your own investment. You don't have to wait for a statement. And it's highly flexible. So if, for example, market conditions changed and the stock market was booming originally, but something is happening in that industry, then you could easily switch from, say, a stock fund into a bond fund or a real estate fund and vice versa. Right? Next. So I don't know if you can see this, but I'll try to go through quite quickly. VM Wealth currently offers 6 funds. 3 of those are denominated in US currency and the other 3 in J dollar. 4 of the funds invest heavily in bonds. The 5th invests in stocks traded on the stock market, local stock market. And the 6th invests in property, real estate, prime commercial properties. And from the properties, of course, you know, we earn rental income. So that alone is a benefit for you, the investor. The minimum for the US, 500 US. The equity fund, bond fund 4 starts at 50,000 J dollar. Equity fund is 10,000 J dollar, and the property fund is 50,000 J dollar. Now, I want us to spend a little time on the area highlighted in yellow. So 2 things that you will look for when you're investing in a unit trust are the historic performance and the indicative yield. We can't tell you for certain. It's not like a savings account where we say you earn 2% per annum and you can calculate 2% on your principal and know exactly what you're getting. Remember, it is based on the valuation of the assets. So the valuation of the property, the valuation of a bond or a stock, and so on. So that's the risk that you take when you're investing in a unit trust. However, The historic performance, although not a guarantee of future performance, does give you an indication as to the management of the different funds. So a lot of expertise goes into the managing, determining which assets to include in the fund, when to buy a stock, when to sell a stock, etc. And so the historic performance is a good indication when making a decision. The indicative yield will tell you what we anticipate the returns to be based on what assets are presently included in any particular fund. So you see for 2017, I'm happy to say that VM Wealth had the best performing, top 2 best performing US funds.